What's going on, everybody? Coach Tiger here. Hey, we're going to do a quick Sunday video, and I'm actually timing myself this time. I know I did a 48-minute video last time. That's way too freaking long. So today I'm going to keep it at 15 to 20 minutes. So hold me to it. So, yeah, basically, I'm just curious to see what you think. So, uh, I'm going to buy one currency this week, and I'm going to sell two currencies. What are they? We'll have to stick around and find out. But first, guys, I want to tell you about our YouTube page, Ola Prime Official. Okay, at Ola Prime Official, as you can see right here. Sorry, I was looking at the wrong screen. Right here, guys. This is where we do our live videos each day, Monday through Friday. So me personally, I'm on 6:30 a.m. to 8 a.m. and that's Central Standard Time. So I go over all things Forex. I throw a little Bitcoin in there, gold, silver, U.S. indices, things of that nature. So that's what I like to buy and sell. I also do some stock trading as well, some of the top large caps, but that's not something that I do a whole lot of on the streaming because it is a Forex show, Forex Fire. So it's myself and Coach Richard. So definitely, please come check us out if you can. If you're not working, if you are working, just know that all these videos are available for playback. You can go look through all of them. After me, the the features guys and gals come on. They trade and help people out from 8 a.m. until 3 o'clock p.m. And again, this is all Central Standard Time. They do throw a Mag 7 stock show in there as well with Coach Daryl and well, a couple of different guys. Okay, so yeah, come in there and check it out, and we'd love to help you out. So yeah, that's that. And then our website, as always, guys, olaprime.com. You can see right here. If you want to join the Discord, you can, because I lurk in there all day throughout the day. So just click that join Discord button. There, you can accept an invite, and then you can hop in there and trade with us and chat with us and ask any types of questions that you have. So that's a little bit about that. Let's move on over because I'm going to try to keep this, again, much quicker than the last time. And we'll just take a quick, super quick look at, oh, what do we want to look at first, guys and gals? How about, well, the financial juice. I mean, I might as well since I'm here. So this is a look ahead. This is just kind of showing some of the upcoming economic report releases that's going to happen. But before I do that, I actually wanted to go over here to my U.S. economic heat map. Okay, this is showing some of the recent reports that have come out, and this is what moves markets. This is what you call fundamental analysis right here. Okay, these are all the different metrics that we look at. The big banks, the institutions, the pension funds, the insurance companies, the hedge funds, the big whales. Okay, people with lots and lots of money that they're trading. Those people are looking at this data right here. Okay, this is where they're basing their decisions. It's not always just a chart. Okay, the charts are sexy and fun and colorful and pretty. That's technical analysis. But the big banks and institutions, they don't care about your 5-minute chart. They don't care about our 15-minute chart, right? They care about the big picture, and they're accumulating and they're distributing their inventory based off of that this data right here. So this is always where I like to start. Okay, the chart is the absolute last thing I look at. If I'm not getting a good fundamental picture, then I don't even look at the chart. Sometimes some of these currency pairs I won't look at for weeks or months. So just wanted to say that. Actually, I want to see if I can move my webcam over just a little bit. There I go. There we go. All right, got that set. So just taking a look over here at the U.S. heat map. Okay, this is for the U.S. dollar. This column over here, and over here is the U.S. stocks. Okay, the S&P, the Nasdaq, the Dow. Okay, the Russell. So that's going to be this aisle. In the last 7 days, okay, anytime you see a date over here that's orange as opposed to white, that just simply means that that's a piece of data that's been released in the last 7 days. 7 days. Okay. So what have we got? We've got manufacturing PMI data that came out bearish. You've got services PMI data that came out bullish. Okay. So PMI, what's that? Well, that's Purchasing Managers Index. So that's just simply how many orders, how many goods, how many services have these, have companies been able to acquire, accumulate, create, that type of thing. So they're basically kind of offsetting each other. Okay. I personally like to put a little more weight into the services PMI because we are going the way of technology these days. That's just my taste. Might be different for everybody, but yeah, those two are kind of canceling themselves out. So now we get down here to the Fed's favorite gauge of looking at the inflation, okay, the PCE, this one right here, that's the personal consumption expenditure. It's basically, they weight this higher than the inflation report, the one that we all get, okay? How much more expensive is the goods and services we're buying, okay? That's inflation, that's CPI. So this is something, the CPI data, this is something that we care about as a consumer here in the United States, okay? How much are we paying for the groceries? How much are we paying for the gas at the pump? How much are we paying for clothing, et cetera, et cetera? Okay, that's inflation. That's what CPI is. PCE, it just kind of goes into a more broader context of the overall spending. That's what the government likes to look at. And when we look at the report from the other day, it was a slightly bearish report from a 2.9, I'm sorry, yeah, from a 2.9% previous and forecast, it actually dropped 0.8%. Okay, so this is slightly bearish for the US dollar, but it's bullish for the stock market and our pocketbooks here in the US. Okay, so that's kind of the way to read that. Down here on the 4th, we have the jobless claims report that came out, and it was actually a pretty good one. Okay, they were projecting, I should say the previous number, we had 218,000 brand new jobless claims. So that's people filing for unemployment. Okay, they projected 2,000 more. The economists did, but as you can see, it was lower. It was lower than the forecast and the previous. That's a good thing for the U.S. dollar. That's a good thing for stocks. Okay, that's money. That's more money being created, more money earned, more money going into the economy. Okay, growing the economy, growing the GDP, that kind of thing. But that was the other day. Just the day before that, the ADP. Okay, ADP non-farm payroll. So how many jobs were created outside of farming, okay, outside of the government? Previous number was 42,000. They projected to go down to 5,000, but the real number, the actual number, was minus 32,000. That's horrible. That's disgusting. Okay, that's not a good look at all. But when you kind of look at all these reports as an aggregate, you take the ones that beat expectations, you take the ones that missed expectations, and it's basically at a 50%. So that just means half the reports have beaten expectations, the other half have missed expectations. So pretty neutral for the US dollar. Okay, I just wanted to kind of say that up front, just to get an idea of, the 30,000 foot view. So that's the US dollar. How do we use that? Well, it just simply tells me I'm not necessarily very bullish or very bearish on the US dollar. I think there's other currencies out there as a Forex trader that I would prefer to go and focus on. What are they? Well, I did allude to the fact I'm looking to buy one currency and sell two other currencies. What are they? Well, let's go take a look. Eco surprise meter. This is where I start my day right here. Okay, this is the speed gauge. One of my coaches calls this a speed gauge, Coach Richard. Okay. So if we know the percentages, saying that whatever the percentage is, that's the percentage of most recent economic data that has beaten expectations. Well, what's the one that's in the lead? Right here, Aussie dollar. Okay, Aussie dollar has beaten expectations on 86% of their more recent, high ticket, high value fundamental analysis, fundamental report releases on the economic calendar. Let's take a quick look. Okay, here we go. Again, anything you see in yellow, orange is releases within the last 7 days. Okay, so what have we got? We had one bearish report that came up. Okay, this is the lone blemish on the Aussie dollar. Okay, that was the GDP. Okay, forecasted 0.7%, actually dropped 0.4%. Okay, actually, or I should say it increased 0.4%, but it missed expectations. So that's not a good look on the Aussie dollar for that particular parameter. We had manufacturing PMI that came out and nailed expectations, 51.6%. That's good. Anything over 50% is expansionary. It's a good sign. Anything under 50% is contractory, contracting, however I say that word. So that's a neutral report. Okay, it met expectations. And then the services PMI, this is the only other one that was released, came out bullish. Okay. Again, expansionary numbers. Anything over 50 is good. Okay. And then you just take a look at all the rest of the data. Everything's been bullish. Okay, from the last releases that we had. So Australia has the strongest currency fundamentally, in my opinion, right now, over 85%. Okay, that's a good thing. So let's go take a quick look at the Eco surprise meter again. Where's the two weakest currencies? It's going to be the British pound, going to be the Canada dollar. Okay, take a quick look at them. Quick look at them, and then we'll get to some top setups and then the chart. Okay, now we're looking at the British pound. Look at this. So you've got a couple bullish reports, okay, over the last period of time. But other than that, most of the rest are either bearish or you got a couple that's neutral. Of late, we did have a good services PMI. So this actually brought it from the dead. It was actually lower. So it's still the weakest currency, or tied as the weakest. But you did have one good report. Still overall though, look at that, 33%. It's not good. Okay. You had the manufacturing come out neutral, which is again is an expansionary number, so that's good. Services PMI came out bullish. So it's actually been a pretty good last week for the British pound. But I don't look at just the last week. I look at all this data as an aggregate. And as an aggregate, it's telling me not to be excited about going out and buying it. If you're somebody that just looks at the last report or two, you're seeing that bullish number come out. You're seeing that they nailed expectations on the other. Okay, and you're going to go out and buy this thing. That's not a smart idea. It's not. Okay, I like to use this as a reason to have price go against that currency into a zone, an opposing zone, so I can buy and take the opposite side of it. We'll get into some examples of that. Okay, but again, currently it's tied for the weakest, along with the Canada dollar, which is popping up now. Okay, last 7 days we've had a bearish manufacturing PMI number. We've had a bullish unemployment rate. Okay, so their unemployment rate actually went down. That's a nice welcome sign for them. They were at 7% unemployment. Okay, that's not great, but they did go down 0.5%. So that's a good thing. That was a bullish number. Employment change, okay, was a bearish number. The previous number was 66.6 thousand. Okay, increase in their employment, but they went down. They increased, but it was much less. So 53.6 thousand. So bearish report, a bearish report, and a bullish report. Overall, Canada again tied with the UK, 33%. Two weakest currencies. Okay, so now let's just go take a look. Now that we know that, at the top setups. Okay, this is my top setups page. This is the Edge Finder. Okay, this is Edge Finder, a1trading.com. Trader Nick over there, Emily, they're awesome people. Work with them, and yeah, just incredible people, make awesome tools. So when you add all the economic data together, again, be wanting to buy the Aussie dollar. Okay, so if I want to buy the Aussie dollar because it's the strongest, I've got one item I compare it with. Okay, when we take a look at COT, the sentiment analysis, okay, the technical analysis, and the fundamental analysis. You add all the factors together: COT, sentiment, retail sentiment, right, seasonality, trend, and then not to mention all the economic calendar events, right? Australia dollar, pair it with the US dollar, which again is only 50%. So Aussie's 86%. So this means I have permission. This is my boss right here, by the way, guys. Okay, this is my boss. This tells me what I can and can't do. This is the first place I report, and then I go to a chart if this gives me permission. So just by looking at that, Aussie dollar is definitely on my buy list. And since I'm buying the Aussie, I go to the short sell side, which is what you see in red over here. You see Australia is the second currency in this. That means what I'd want to do is short sell the British pound because it is one of the weaker currencies. I just showed that. And then I want to sell the pound and buy the Aussie. That's how you pair these currencies together. That's how currency trading works. It's pairing a strong and a weak currency together in order to formulate a buy or sell. Okay, because Australia is the second currency in this pair, that means I want to sell the pound but buy the Aussie dollar. Okay, that's very simply how that's read. So it's the strongest score I'm getting right now, and it's actually been strong like this for the last week or so. So for me, I want to be selling the pound and either buying the Aussie dollar or buy the New Zealand dollar. Okay, as you see the scores here, that's the two weakest. So this is what we'll look at real quick. And then after that, we'll take a look at these two strongest. So buy the euro, sell the dollar, buy the New Zealand dollar, sell the US dollar. Okay. So that's my top two, bullish. We might as well just look at those two or those four collectively, and we'll just go from there. Okay. Let's go do that. We'll hop on over to our chart. One of the first things I like to do, guys, when I get over here to the charts is take a look at the VIX, the volatility index, and just see where it's at. See if it's down here in the 15 area, 15 to 18 area. Okay, that just basically tells me that everything's fairly calm. Okay? There's no craziness. When you see spikes like this that get up over 20, or even way back here on Liberation Day, that got all the way to 60, right? That's when everybody's scared out of their wits. Okay? This is when stocks and everything are flying, exchanging hands quite rapidly. So currently, we're in a normal period, no big deal. Dollar index, the Dixie. Okay, this is the dollar index. It's been kind of low all year, right? Really has. All year it's just been going down. This is January right here. Just been going down. So I don't really read too much into this, to be quite honest with you, because I just kind of look at currencies on a pair basis anyway as a forex trader. But it is always nice to see which direction the dollar is going. This is a daily time frame, just to get an understanding of the basic mood and attitude of the currency itself. Now I'm interested in buying the Aussie dollar. Okay, this is the Australia dollar the Aussie dollar index, okay? Australian dollar currency index. And you guys can see it's just been going up pretty nicely. It really has. Take a look even way back here. It's been consolidating roughly the last several months, but of late it's been kind of going up, so that's nice. Now if I take a look at the Canada index, the KEXI, okay, you can see it's had a pretty nice spike of late on Friday, and then the British pound, which was the other weak currency, has been up as well, okay, just a little bit. So it's always nice to understand where all the indexes are for the currencies that I trade. Okay? The AXI, the Australian currency, the BIXI, right? The British pound, the KEXI, the DEXI, the EXI, the JEXI, the SEXI, okay, for Switzerland, the ZEXI for New Zealand. So it's just a good idea to know that. But right now I'm going to go to the actual currency pairs themselves and see if I can find a supply or demand zone to buy or sell the asset. So I've already said that my strongest bullish score was the euro dollar at a plus 10. Let's take a look at it. Okay, this is the euro dollar. This is the daily chart. It's been consolidating sideways since about June. Okay, this is just nothing more than a sideways contraction. Okay, we had a big spike up from basically when the Trump presidency began, okay, on the euro dollar. Then it just kind of consolidated and went sideways. So do I have a demand zone to buy in? That's the question. Okay. If I'm looking at a daily time frame, I can see that I have a new higher low and a new higher high. So this tells me that after this decline, prices are trying to rebound and go up. Well, that's a good thing. That's a good thing because it's giving me a bullish signal. It's also a good thing because if you look at this swing high point and this swing low point down here, well, we're relatively closer to the bottom than we are the top. So that tells me overall, if I'm looking at the curve analysis, okay, it tells me I'm buying low and selling high. Okay, I want to be buying in the bottom part. This is the discount zone. So now, if I see this on a daily time frame, now I just got to go down the 4-hour time frame, find a demand zone. Excuse me, my throat's tickling me, by the way. Okay, so here's a 4-hour time frame. Do I have a demand zone in here anywhere? Well, I got one. I got one here. Okay, let me turn my drawings on. You'll see. Yeah, I got one here, and then I've got one here, but it's not on the red candle itself. That just tells me I'm going down to a smaller time frame. Okay, to go down to time frames, just go down until the picture looks good. Okay, and then this is basically a 2-hour time frame, and you guys can see my demand zone right here. Okay, so there's a demand zone there, strong candle out, just kept going. It broke some tops. Okay, that shows that this zone's got strength because it was strong enough to break a structure. Okay, this is one of the first things I demand of my demand zones and supplies is that they break through an opposing zone. Okay, so it's broken the zone. We had the leg in candle. Let's zoom in. So we had a leg in. We had the one candle of base on a 2-hour time frame, and then we had the leg out. Okay, that's strength in, base, strength out, continued strength. That's why it kept going up and broke a structure. It's good. So all I need now is just a return to price. I like to also look deeper into the zones. fine tune it. Go to smaller time frames, see if I can find some confluence. Okay, if I go down to a 1 hour, I'm not really getting a gap anywhere. Okay, well, I guess I am actually getting a gap. I'm getting a gap from right here to right here. There's your gap. It's what you call a fair value gap, or acceleration gap, or runaway gap, or novice gap. Okay, there's all kinds of definitions for it. It just basically shows that this candle had strength from this point here. So that's the 1 hour time frame. Let's just go down another time frame. Make sure I have a gap here as well. Do I have a gap? I don't know. I haven't looked at this. Yeah. Okay. So that the gap down here would be looking something like this. Okay. Top of this candle, we bypass the leg out candle. We go to the bottom of the second candle. See that gap? That's good. Now, do I have another gap in here? I do. Right here. Okay. Let's take a look. I've got a gap here as well. Top of this candle, the bottom of this candle. There you go. Another gap. So that tells me I need to put a line on the proximal line of this area here and look to possibly buy down here. Okay, take away some of this, or basically improve my risk risk management. Okay, I could buy up here, which I put that up there because of the, I believe, 15-minute. Yeah. Go over here and take a look, guys. Take a look. Let's take a look. Why did I put my alert there? I think I just, oh yeah, well, basically you can buy kind of anywhere in here, guys, to be quite honest. Anywhere in this whole area, okay, that whole area. But as long as I'm seeing gaps on some smaller time frames, that's a good thing. So this will be one of my number one setups from a 2 hour time frame. So basically I just want to see price come down, okay. We get into the demand zone itself, catch a bid, okay. If I can start seeing some breaks of structures like this, then we could look to buy. What's a break of structure? Okay, this is just projecting, but if we have a new swing point here, and then we get this new breakout, okay, breakout, close up here, and then we have price come back down, and in this leg here, we would have a new demand zone created, and this would be the trigger. This right here would be the trigger, okay, where that yellow is. So basically, price breaks through the structure and then retraces again to bounce into the demand zone. And that right there, ladies and gents, ooh, not that big. That would be the point to buy. Right in here. Just like that. And we'll just color that red so you can see it. So that's the entry point. Okay. But that only happens if I see a break of structure and then close above this white line. Okay. Now it's not going to look exactly like this, but this is just the basic idea. Okay. Break a structure, return, brand new demand zone, inside of the demand zone, and then we buy and we look to sell at the top. Okay. Top of the swing high or any other types of supply zones that may form up in here. So looks to me like I've already drawn one up here. Okay. So I would have drawn that up on what time frame is that? 15 maybe? No, 10. 10 minutes. Okay. 10-minute supply zone. Right. You see the price drop like crazy, broke some structures, right? So I just want to make sure if I buy into this trade, let me go back to my 2 hour time frame. Okay, if I buy into this trade, I want to make sure, and when price comes into this zone, I just want to make sure I've got my stop loss trailed. I don't want to give away a ton of unrealized profits, okay? Because it could very easily bounce into that zone and then fall back down, okay? So that's just kind of that's the way I like to confirm trades, okay? Get confirmation, but I want to do it on a smaller time frame because I don't want to do it. If I do it on a higher time frame, it's going to take away all my risk. It's going to take away all my reward. Right, so we're talking 1 minute, 5 minute, 10-minute time frames down in this area. Okay. Now that's not my favorite demand zone, by the way. My favorite demand zone is a little further down. Okay, this one down here is better because again, if I just put on my curve analysis, you guys will see what I mean by. Let me turn off my sessions tool. Well, that might be a little difficult to see, but you guys see this red line down here, okay? That's the 33% line. This green line right here is the 33 and 33. So basically this is splitting it in 3 parts. Okay, another way to do this, which I do from time to time, is pull up a flag of Hungary, okay, the Hungarian flag. And if I line up the bottom with the swing low and the top with the swing high, okay. So again, swing low down here, swing high up here. Okay, if price is coming down into the green part, that's giving me permission to buy. If I'm trying to short sell and on the opposite end, I do want to sell up at the top. So right now, if I'm buying in the red. Okay, that's expensive. If I'm buying in the middle, that's diddling in the middle. Okay, that's where people get chopped up, right? Like right here, all this price action right here. See all that? That's chop city. That's retail traders getting chewed to pieces, blowing accounts left and right, getting frustrated. Why? Because they're in the middle. Again, swing low is the cheap zone. This is the discount. I'm a cheap ass. I want my discounts if I'm buying something. Okay, ladies, anybody. Okay, everybody that buys groceries. Okay, do you want to buy retail price? If you're going to buy a coat, you're going to buy a purse. You're going to buy a car or a computer. Do you want to buy up here where prices are the most expensive? Or do you want to wait till things go on discount and buy down here where it's discounted, where it's cheaper? Okay. Buying or selling currencies, stocks, bonds, crypto, okay, indices, okay, gold, silver. Buying and selling anything in the markets is you should treat that as the exact same way as you would buy or sell anything in life. Groceries, food, houses, whatever. Okay. Why pay full price when we can pay a cheaper price? So in general, that's my goal. And you guys can see that my demand zone is pretty much, it's pretty much there. Okay. It's kind of half in, kind of half out type of thing. But nevertheless, I would have a stop loss below, keeping me safe. Okay. So that right there would be my stop loss. That red line that you guys see. So that's just a little bit of a kind of a 30,000 foot view over curve analysis. Buying at discounts, selling at premiums. Okay. So that's how that works. And then if you're a short selling, if you're selling up here, you're selling in premium. You would not want to be selling down here, right? If you have a used car, say you want to sell it for $15,000 up here, okay? You want to sell it for $15,000. You don't want to sell it down here where you're only getting $10,000. So that's how short selling works. You want to sell as high as possible, okay? Borrow the shares, borrow the inventory, and then buy back later to cover, and then get that difference. And that's short selling. I can go more in depth than that in another video, potentially throw it on here, but for now, I just like to use those analogies because I think they might help out. So there you go. That's going to be the one bullish item that I cover today. And yeah, because I am in the middle on this one, that's why I have to see this confirmation entry. Okay, if I come down here, that's going to be a little more bearable to buy because it's cheaper. It's down in the bottom third of the swing low, swing high. Okay. Now it may not ever get there because again, euro dollar is quite strong. It's a positive 10 score. It's a very bullish bias. So that's why I'm giving this zone the time of day to begin with. If I wasn't getting a bullish reason to buy this, I would ignore this altogether and just wait for a retracement all the way down here to this demand zone. Okay. Hold on a second. This demand zone right here. Okay. That would be this would be the optimal place to buy this item. Gosh dang it. Right there. Let me get that yellow green. There we go. Okay, that's the better zone. We have efficient price structure over here, meaning candles and wicks are all overlapping each other. But this right here is the first inefficiency I see in the market. Why? Because we have a fair value gap right here. Okay. There's going to be our fair value gap. This is showing where the ultimate discrepancy is in price, inefficiency. But again, because it's so strong, I'm going to take a stab, and I may not be putting on full risk up here. If price comes all the way down here, that'd be a normal risk. But up here, I'm going to start taking risk off and just tip my toes in, okay? So that's how I look at that. So that's euro dollar. Lastly, I'm going to do a quick, because I am already at 30 minutes. My goodness. All right, pound Aussie, and then we'll wrap this up, guys. pound Aussie. Okay, daily time frame, very slow downtrend, but the most recent leg from this swing high, okay, is down. Now again, I want to short sell this. So the best thing I can come up with in the immediate time frame is this supply zone, but I have to be aware. Okay, this is again a 4-hour time frame. I have to be aware of this demand zone over here. Okay, so if price comes down and bounces into that zone before it hits a supply zone, game off. I'll be waiting for a retracement up higher. As long as it does not hit that first, then you guys can see right here, there is a little supply zone right here. Okay, again, you got the supply zone, you got a little gap underneath it like that. Oh gosh, dang it. Okay, so that's showing inefficiency. So real simple, guys. Bounce up for a short sell, and I'm gonna turn this red, and then I'm gonna buy to cover just ahead of the demand zone. Simple as that. Okay, and that's all based off of the again the top setups. There's going to be your picture. This is a very dynamic list. Get out of your way. Yeah, let's do this actually, so I can get out of your way. Okay, there you go. Okay, there's your top setups right there. The DAX in Germany's on there. The Dow. Okay, that's the only index, the U.S. index that's on here. It's giving me a +6. The S&P, the Nasdaq, they're nowhere to be found on here. They're pretty neutral. Bitcoin is pretty close to bullish, but it's not, so it's neutral. Okay, you guys can see the items right there. So the common theme is selling the U.S. dollar and selling the Japanese yen, selling the British pound, but buying the Aussie dollar, okay, Aussie yen, Aussie dollar, and then a couple euro pairs to buy. So that's basically it, guys. I've already run over. I got to figure out how to shorten these videos, but you did at least get my top setup on the bullish side, euro dollar, top bearish setup, okay, pound, Aussie dollar. Other than that, the only other thing is just a quick look at the economic calendar for the week. Okay, tomorrow on Monday, we do get Australia's cash rate statement coming out. Okay, they are projected to keep their rates the same. We get the RBA lip flapping session underway after that, and that's it for Monday. Okay, it's just the Australia's high impact rate statement. That's it. Tuesday, Governor Ueda in Japan, he's going to be flapping his lips. It'll be interesting to listen to see if he's going to throw out the I word. Okay, intervention. Japan, they're always intervening with their currency, manipulating it, flipping it up, flipping it down, that kind of thing. So I'll be definitely interested to see what he has to say. The JOLTS jobs reports here in the U.S. coming out. Wednesday is a big day for the dollar, the Aussie, and the Canada dollar. That's a lot of red folder events, guys. Canada's bank statements coming out, or rate statement rather. Okay, they're projected to keep their interest rates the same at 2.25%. What we got? Yeah, and then of course we have our own here in the U.S. Now look, we're projected to drop our rates by another 25 basis points or a quarter point. Okay, so I do believe last time I looked, we were hovering around. What was that? Let me go to my CME Fed Watch tool, guys. This is going to show the percentage chance that they drop it, 25 points, and you can see right there, 86% chance. Okay, this is the bond market projection. So there you go. It's all but settled. It seems like to me. Let's go back to our calendar real quick. So yeah, that's the Fed funds rate, and then their flip-flapping session to follow, of course. Unemployment rate and employment change numbers for Australia comes out Wednesday evening as well here in the States. Swiss franc on Thursday's policy rate, they're projected to keep rates the same. They have a zero interest rate policy right now. It's pretty crazy. So that will be, get myself moved over here. That'll be on Thursday again. U.S. dollar, our weekly unemployment claims reports. Okay, they're projecting it to go 30,000 higher, so that's not good. And then we'll round out Friday with the GDP month over month for the British pound, where they are projecting to get back on the other side of zero. Okay, this is their GDP. Okay, so that's it. I've expired my lot. Hey, at least I got it down to 34 minutes, so it's 14 minutes less than the last time. I'll try and do better the next time. Get it even less. But with that, guys and gals, please have a wonderful trading week. Stay safe. Use stop losses. Don't over leverage. Just know that supply and demand is everything rises and falls on supply and demand. That's why I trade supply and demand zones. Learn Wyckoff theory basics. Okay, that's markets 101, accumulation, distribution, trend phase. Figure all that stuff out. Okay, that will make trading more simple. I did not say easy. I said simple. Okay, simple. So last thing I'll say again, guys, just please come over, watch our videos. These again are available for playback. Check us out, olaprime.com, if you're looking to get funded with a challenge phase. And with that, hey, let's go trade like a tiger. Have a good one.